Welcome to our deep dive on technical analysis. We've got those notes you requested and that YouTube video summary of Rolf Sch's Technical Analysis Masterclass, all set to unpack.
Sounds good.
So instead of just, throwing definitions around, I thought maybe we could approach it differently. Like imagine we're shadowing a trader and seeing how they use these tools in real time. What do you think?
Yeah, I like that. It's one thing to know the jargon, but actually seeing it in action is way more helpful.
Right. So picture this. Our traders looking at the stock that's been kind of all over the place lately, up and down, and they're trying to decide, is this thing about to take off or is it about to plummet?
Okay, yeah, that's a
Yep.
pretty common dilemma.
Mm.
And that's where technical analysis can be a game changer. Instead of just guessing, they can actually use charts to see the stock's history and see where it might be headed.
Now, for my notes, I remember there are a bunch of different types of charts. So which one would our trader probably pull up in this situation?
Probably a candlestick chart. Those are really useful in a case like this. They're really visual, and they pack a ton of information into each candle.
Okay, I remember those being like little boxes on the chart. But what makes them better than just a simple line chart that shows the price?
So each candlestick actually shows you 4 key pieces of information: the opening price, the closing price, the high and the low for that specific time frame.
Ah, so it's not just where it ended up, but how it moved throughout that day or week or however long you're looking at.
Exactly. And the cool part is the shape and color of the candle can tell you even more. So green candle usually means the price closed higher than it opened, which suggests that the buyers were in control, and then a red candle means it closed lower, which hints that maybe the sellers had the upper hand.
So just from a glance, you can kind of get a feel for who was winning the tug of war on any given day. That's neat.
It is. And there's more. The length of the candle's body tells you the range between the open and close. So a long green body, that means strong buying pressure. But then a long red body, well, that suggests a sell-off.
I see. Okay. So back to our trader. How would they actually use these candlesticks to make a decision?
That's where patterns come in. Let's say they see a hammer pattern. Imagine a red candle with a short body and a long wick extending below it. It's kind of like a hammer hitting a nail.
So the price dropped way down during that time, but it managed to close near its opening price.
Right. That long wick tells us that the sellers tried to push the price down, but the buyers came in strong and drove it back up. It might be a sign of a potential reversal, a hint that the downtrend might be ending.
Oh, interesting. Even though it's a red candle, the shape suggests buyers are stepping in.
Exactly. But of course, no pattern is a 100% guaranteed predictor. It's just a clue our trader can use.
This reminds me of something else I read about trend lines. How do those fit into all of this?
Trend lines are super important. They help you visualize the overall direction of the price movement. You can draw a line connecting the lower highs in a downtrend, showing that each peak is lower than the last.
So it's like visually confirming that the price is moving lower over time.
Exactly. And here's where it gets really interesting. If our trader sees that hammer pattern we were talking about forming near that downtrend line, it could be a really strong signal that a reversal is coming.
Because it's happening at a point where the downtrend is already weak.
Precisely. The hammer is like a little rebellion against that trend, and that trend line is where the battle is likely to be fought.
Gotcha. So our trader has candlestick patterns and trend lines. What else can they use to help them make a smart decision?
Well, that's where momentum indicators come in. They can help confirm what the candlesticks and trend lines are suggesting. One popular indicator is the RSI, the Relative Strength Index.
Yeah, I remember seeing that in my notes, but it sounded kind of complicated. Can you break that down for me a bit?
Sure, think of it as a speedometer for price momentum. It measures how strong recent price changes have been, and it oscillates between 0 and 100.
So a high RSI means the price has been shooting upwards.
Right. A reading above 70 generally means that the asset is overbought, which means the price has risen too fast, and it might be time for a pullback. And then an RSI below 30 could mean it's oversold and potentially ready for a bounce.
So our trader would be watching for those extreme readings as potential warning signs?
Precisely. If they see a hammer pattern near a downtrend line and the RSI is showing the stock as oversold, that just adds more weight to the idea that a reversal could be on the way.
It's like getting multiple confirmations from different sources to increase their confidence?
That's a great way to put it. It's all about gathering evidence to make smart decisions and manage your risk.
Which brings us to a point. I definitely don't want to skip over risk management. This feels like where a lot of new traders struggle. It feels like we've already covered so much, and I'm starting to see how these pieces fit together. But even if all these tools, isn't there still a ton of uncertainty in the market? How does our trader actually manage that risk when things could go either way?
Right. That's the big question, isn't it? No matter how much analysis you do, there's always that chance the market's going to do its own thing and move against you. That's why risk management is absolutely crucial.
Okay, so what does that actually look like? Like, what steps can our trader take to protect themselves?
One of the most important tools is a stop-loss order. It's basically like setting a safety net for your trade.
I've heard of those, but I'm not totally clear on how they work. Could you walk me through it?
Sure. So let's say our trader decides to buy this stock, right?
Mm-hmm.
They're banking on that hammer pattern, and the oversold RSI suggesting a reversal. So they might set a stop-loss order a few percentage points below their entry price.
So if the stock dips below that level, their order to sell is automatically triggered.
Exactly. It takes the emotion out of it.
Yeah,
You're not scrambling to sell when the price is tanking and maybe making a bad decision.
that makes sense. It's like having an exit plan ready to go before things get too crazy.
Exactly. It helps you limit your losses on a trade that just isn't working out. And speaking of limiting losses, another key part of risk management is position sizing.
Okay, so that's how much money you put into each trade, not just your entry and exit points.
You got it. Even if you're right about where the market's going, risking too much on one trade can be really bad if it moves against you, even for a little bit.
Kind of like, don't put all your eggs in one basket.
Exactly. You want to spread your risk across different trades and different assets. That's called diversification.
Oh, yeah. I remember that being a big deal in investing. But does it apply to trading, too?
Absolutely. It's just as important, if not more so, for active traders. Diversifying across sectors and asset classes, even trading strategies, can help smooth out the ups and downs that always happen.
So if one trade goes south, it doesn't wipe out your whole account.
Exactly. Diversification helps you handle those rough patches and stay in the game long term. It's like having a safety net for your whole portfolio, not just individual trades.
This is all starting to make sense. It's not just about picking the right stocks or predicting the future perfectly.
You're right. It's about having a good process, managing your risk, and being disciplined. And that's where the mental side of trading really comes in.
Ooh, I have a feeling this is where it gets interesting. I'm guessing emotions can play a huge role in all of this.
Absolutely. Fear and greed are two of the biggest emotions that can really mess with a trader's success.
Yeah, I can see how that would happen. When you see your money on the line, it's hard not to get emotional about it.
It's totally natural.
Yeah.
But those emotions can lead to impulsive decisions like selling too soon because you're scared, or chasing losses, trying to make them back quickly.
So how can our trader keep those emotions in check? Are there any techniques they can use?
One of the best things to do is have a clear trading plan and actually stick to it. That plan should lay out their goals, risk tolerance, how they'll enter and exit trades, and even what they'll do when they have a losing trade, because those are going to happen.
So it's like having rules to follow so you're not just deciding based on gut feeling or panic.
Exactly. That plan should be based on logic and analysis, not on your emotions. It's also really important to know yourself, like really understand your own psychology.
What do you mean by that?
Well, do you get easily influenced by news headlines or what other people are saying? Do you hold on to losing positions for too long, hoping they'll turn around? Knowing your own biases and weaknesses is a huge step towards making more rational decisions.
It's like having a pre-flight checklist for your emotions, making sure everything's in order before you take off.
I like that analogy. And speaking of checklists, another really helpful thing to do is keep a trading journal.
So you're not just relying on memory, you're actually writing down your trades and your thought process.
Exactly. That lets you look back at your performance objectively, see if there are any patterns in your behavior, and learn from both the wins and the losses.
It's like having a coach who can help you analyze your game and come up with a better strategy.
Precisely. And speaking of improving, one of the most important things for long-term success in trading is discipline.
That sounds way easier said than done. How does our trader actually develop that discipline to stick to the plan, especially when the market is being unpredictable?
It's definitely tough, but it's essential. Discipline means staying focused on your long-term goals, even when things are tempting in the short term.
So it's about resisting those urges to chase every hot tip or jump on every bandwagon that comes along?
Exactly. It's about making decisions based on your plan and your analysis, not on fear of missing out or just getting emotional.
And I'm guessing patience is a big part of that too.
Absolutely. Patience is all about waiting for the right opportunities, the ones that really fit your strategy and your risk tolerance. It's about knowing that you won't find a perfect setup every day, and that's okay.
So it's about being selective, waiting for those high probability trades instead of forcing something that isn't really there.
Exactly. It's about quality over quantity. And that brings us to another really important trait: consistency.
Okay, so that's about applying your approach over time, not just switching strategies based on a few wins or losses.
You got it. Consistency is what separates the pros from the amateurs. It's about trusting your process, refining it as you go, and sticking with it, even when you hit a few bumps in the road.
Like having a winning formula and not giving up on it just because of a few setbacks.
That's a great way to think about it.
Yeah.
It's about believing in your approach and not getting thrown off by the noise. And speaking of noise, one of the biggest challenges for any trader is filtering out all the distractions and focusing on what actually matters.
Yeah, I can imagine the market can be pretty overwhelming, especially with all the news, opinions, data, everything flying around.
It definitely can be. That's why it's so important to think critically and not just follow the herd.
So do your own research form or your own opinions. Don't just get caught up in the hype.
Precisely. You need to be a little skeptical. Question everything. Look for evidence to back up your decisions. And that's where technical analysis can be so helpful.
Because it gives you a way to make decisions based on data, not just gut feeling or what someone else is saying.
Exactly. It's about spotting patterns, identifying trends, using indicators to confirm what you're seeing. It's having a system for analyzing the market and making smart decisions.
It's kind of like being a detective looking for clues to solve the mystery of the market.
Uh-huh. I love that. And just like a detective, you need to keep learning and adapt your methods. The market's always changing, so you got to stay ahead of the game.
So it's not just about memorizing a bunch of rules, it's about always being a student of the market and learning new things.
Absolutely. And that's what keeps trading interesting. It's a constant challenge, a puzzle to solve. And when you start to see the pieces come together, it's a really rewarding feeling.
I can imagine it's like you're cracking a code, getting a deeper understanding of how the market actually works.
It's kind of like that. And the more you learn, the more confident you become
Yeah.
in navigating all the complexities.
And that confidence, I bet that's super important for handling those rough patches that every trader goes through.
You're absolutely right. Confidence, discipline, and patience are the foundations of long-term success in trading.
It sounds like we're talking about more than just technical skills here. It's about having a trader's mindset, a way of thinking and approaching the market that's strategic and resilient.
Exactly. Trading is as much a mental game as it is technical. And just like an athlete, you need to train your mind as well as your body.
So develop mental toughness, emotional control, the ability to stay focused and disciplined even when things get intense.
Precisely. And that's where those qualities we keep talking about, discipline, patience, consistency, become so crucial. They're the mental tools that help you stay grounded, make rational decisions, and handle all the ups and downs without losing your cool.
It sounds like a really holistic approach to trading, one that brings together both the technical side and the psychology.
You got it. Technical analysis is a great tool, but it's only as good as the trader using it.
It's like having a fancy sports car. You need the skill to actually drive it.
Perfect analogy.
Yeah.
And a skilled driver knows their car really well. A successful trader needs that same deep understanding of the market itself.
So it's not just about mastering the technical tools, it's about understanding the market's psychology, the things that drive price movements, the patterns that keep showing up.
Exactly. It's about really studying the market, observing, analyzing, adapting your approach as you go.
Sounds both fascinating and challenging. And I bet it's super rewarding when you start seeing everything click into place.
Absolutely. There's nothing quite like developing a strategy and seeing it consistently work. It shows all your hard work, your discipline, your dedication to mastering this.
And I bet there are always new things to learn, new challenges to keep it interesting.
Oh, definitely. The market is always changing, throwing new opportunities and obstacles your way. That's what keeps it so exciting.
So for a listener who's ready to dive in, where do they even start? There's so much information out there, it can be overwhelming.
It's true. There are tons of resources, but you got to start with a strong foundation.
Yeah.
I always tell new traders to start with a demo account.
So like a practice field before the big game.
Exactly. It lets you test out different strategies and get comfortable with a trading platform without risking actual money.
I bet that takes some of the pressure off, especially when you're just starting out.
It definitely does. You can experiment, make mistakes, learn from them all without any financial consequences. It's like training wheels for your trading journey.
Makes sense. But at some point, you have to take the training wheels off, right? How does our listener know when they're ready to trade with real money?
Unfortunately, there's no one right answer. It's a personal decision based on your comfort level, how much risk you're okay with, and how well you're doing in your demo account.
So it's not just about hitting a certain number of wins, it's about feeling good about your process and knowing how to manage the risk.
Exactly. And even when you do start trading with real money, start small. Don't go all in right away.
Yeah, that sounds like a recipe for disaster, especially when you're still getting your feet wet.
It really is. It's like building a muscle. You start with lighter weights and gradually increase as you get stronger. Same thing with trading.
Start with a small amount that you're comfortable losing and then slowly increase as you gain more experience and confidence.
Exactly. Protecting your capital is just as important as making profits. And speaking of learning and growing, I always tell traders to find other resources and connect with other traders.
So it's not about figuring everything out alone. It's about tapping into that network of knowledge and experience.
Exactly. There are amazing books, websites, online communities, all kinds of places where you can learn from more seasoned traders, share ideas, get support. It's like having a pit crew to help you fine-tune your trading and get back on track when things get tough.
Those are great insights. As we wrap up this deep dive, is there any final wisdom you'd like to share with our listener? Something to take with them on their trading journey?
After all these years of trading and studying the market, the biggest thing I've learned is to just embrace the journey. It's not just about the destination. It's about learning and growing and always pushing yourself to be a better trader.
That's a great way to put it. It's not a sprint, it's a marathon.
Exactly. There will be highs and lows, wins and losses. But if you're dedicated to learning, adapting, and honing your skills, you'll be well on your way to reaching your goals.
This has been such an amazing deep dive into technical analysis. I feel like we've broken down some really complex ideas and given our listener a solid foundation.
I hope so. Remember, knowledge is power, but only if you use it. So take what you've learned, start practicing, and never stop exploring the world of trading.
To our listener, thanks for joining us. We hope you found this helpful. Remember, the market can be challenging, but also incredibly rewarding. With discipline, patience, and a willingness to learn, you can unlock its potential and achieve those financial dreams. Happy trading. So we've given our listeners this incredible toolkit, but where do they actually go to, put it all into practice?
That's the question, isn't it? Where the rubber meets the road. I always recommend new traders start with a demo account.
Oh, so like a practice run before they use real money.
Exactly. It lets you test out different strategies, get a feel for the platform without any real risk.
Yeah, I bet that takes the pressure off, especially when you're still learning.
For sure.
Mm,
You can experiment, make mistakes, and it doesn't cost you anything. It's like having training wheels.
that makes sense. But eventually you have to take the training wheels off, right? How do you know when you're ready to trade with real money?
There's no magic formula, unfortunately. Depends on your comfort level, your risk tolerance, and how consistently you're doing on that demo account.
So it's not about winning a certain number of times. It's about feeling confident in your process and managing risk.
Exactly. And even when you do switch to real money, you got to start small. Don't go all in on that first trade.
Yeah, that sounds a little risky.
It is. It's like lifting weights. You start small and gradually increase as you get stronger. Trading's the same way.
Start with a small amount you're comfortable maybe losing and increase your positions as you learn and get more confident.
Precisely. Protecting your money is just as important as making money. And while we're on the topic of learning and growing, I always encourage traders to find other resources and connect with other traders.
So it's not about going it alone. It's about tapping into that shared knowledge and experience.
Exactly. There are great books, websites, online communities,
Yeah.
so many places you can learn from experienced traders, bounce ideas around, get support. It's like having a pit crew to keep your trading tuned up and get you back in the race if you hit a snag.
That's a great way to think about it. So as we wrap up this deep dive, any last words of wisdom for our listener? Something to carry with them as they start trading?
If I had to pick one thing I've learned over the years, it's to just embrace the journey. It's not just about the destination. It's about learning and growing and always pushing yourself to be better.
I love that. It's a marathon, not a sprint.
Exactly. There will be ups and downs,
Yeah.
but if you're dedicated to learning, adapting, and refining your skills, you'll be on the right track.
Wow, this has been an incredible journey into the world of technical analysis. I feel like we've not only demystified some pretty complex concepts, but also given our listener a roadmap to get started.
I hope so. Knowledge is power, but only if you use it. So take what you've learned, start practicing, and never stop exploring this fascinating world of trading.
And to our listener, thanks for joining us. We hope you enjoyed this deep dive. Remember, the market can be tough, but it's also incredibly rewarding. With discipline, patience, and that willingness to learn, you can unlock its potential and achieve your financial goals. Happy trading, everyone.